The oil patch doesn't play by yesterday's rules, and neither should we. Beneath these steady commodity prices and ticking rig charts, real transformation is pulsing, less like a revolution, more like quietly humming algorithms, rewriting the future as we speak. If you're measuring progress by the barrel counts alone, then you're missing the plot. Let's get under the surface and decode where discipline, innovation, and a touch of irreverence are taking the industry next. Crude markets have been sending mixed signals, bouncing between support and resistance, like a drill bit hitting alternative layers of shale and limestone. We see WTI crude hovering around 65, Brent just a couple of dollars higher. It's a landscape of moderation and discipline. Gone are the days of drilling just for drilling's sake. Good old wildcatters. The current U.S. rig count tells us this story perfectly. We're looking at 539 total rigs, a number that whispers, not shouts. The oil rig count is down 15% from a year ago. That's not a retreat, it's a strategic repositioning. You know, I've spent decades in this industry, boardroom battles over billion-dollar deals to see the raw determination on the rig floor in the Permian Basin. I've seen booms and busts. It'd give most people whiplash. And what I see now is something entirely different. It's an industry that's learned from its own chaotic history. The widespread capital discipline we're observing isn't a sign of weakness. It's the signature of a mature, intelligent, and forward-thinking sector. The supply side is where the plot thickens. U.S. production has been remarkably resilient. Efficiency gains and longer laterals are offsetting the drop in rig counts. We're holding our own, but the real action isn't just in the ground anymore. It's in the deal flow. Consolidation, that's the name of the game. When Chesapeake acquired Southwestern Energy for $7.4 billion, it wasn't just another transaction. It created a natural gas titan, a company now called Expand Energy. And that fundamentally reshapes how the U.S. energy landscape looks. Why are we still talking about a deal that closed in 2024? Because the shockwaves are defining 2025. This merger is a case study in strategic scale, influencing everything from domestic gas prices to our growing LNG export capacity. It's a structural shift, a signal that the future belongs to those who can operate with immense efficiency and strategic foresight. It's not an isolated event. When we see Crescent acquiring Vitol Energy, another move in this high-stakes game of strategic consolidation, this is the new paradigm. The winners aren't the ones with the most rigs, but the ones with the smartest operations, the tightest balance sheets, and the clearest vision, maybe aligned with the geopolitics at play. Technology, efficiency, and disciplined capital allocation are the new currencies in an industry evolving faster than conventional wisdom acknowledges. But let's not get lost in the numbers. This is also a story about people and policy. It's about advocacy. When our industry faces challenges, we don't just weather the storm, we work to navigate it. Look at the efforts of organizations like TIPRO. They've been at it since 1946, fighting for the producers and royalty owners who are the backbone of American energy. Just recently, they were in the trenches defending crucial tax provisions like intangible drilling cost and percentage depletion. When carried interest came into the crosshairs during the One Big Beautiful Act negotiations, TIPRO and its partners stepped up. They launched a targeted campaign, unified the industry's voice, and successfully protected a vital component for the business model that fuels so much of our growth. That's not just lobbying, it's effective collaborative advocacy. It's a reminder that our strength lies in our ability to work together with a unified message. And the policy challenges that keep coming. The EPA is holding hearings on new rules. Congressman Tony Gonzalez is reintroducing the Protect the Permian Act to combat the rising tide of oil field theft, a sophisticated criminal enterprise that threatens not just our bottom line, but our national security and the safety of our workers. These are the battles fought not on the rig, but in hearing rooms and legislative chambers. They are just as critical to our future. So what does all this mean? Where is the signal in all the noise? It means adaptation is non-negotiable. It means the U.S. oil and gas industry is not just surviving, it's evolving into a smarter, more resilient version of itself. We're positioning ourselves for longer-term growth, not just through domestic production, but through major LNG export agreements that connect American energy to global markets. We're responding to global volatility and the energy transition, not by shrinking, but by getting smarter, more efficient, and more strategic. The future is arriving with static, with mixed signals and market jitters. So what? Beneath the surface noise, a clear trend is emerging. There's an industry forged in wildcatting and risk that's now defined by discipline and strategy. An industry once fragmented is now consolidating for strength. An industry that has powered this nation for over a century is now prepared to power the world in new and innovative ways. This isn't about looking back at a golden age. It's about building a more durable, more intelligent, and more influential future. We must continue to innovate, advocate, and collaborate. We must embrace the changes because within that volatility lies immense opportunity. The future always arrives with a glitch. Tune out the noise and tune into opportunity. Mark Roach, FutureWise Energy, wishing you all the best. See you on next broadcast.